Yo, what's up guys, welcome back to the channel. In today's video, I'm going to go through all the trades that we took throughout the week, why we took them, how we took them, and just, go through all the trades that we took throughout the week and, just give you guys a little recap. So to start the week on Monday, this is what we ended up opening like. So on Monday, you can see we ended up flipping bearish. On Friday, we ended up getting this massive green candle here at the open, and then pretty much at that point you could almost assume that we're gonna flip bearish because the 50 was pointing up, the 10 was up. If you wanted to wait a little bit for that extra confirmation, then you could have waited for one more candle, but it's pretty clear that the bears were going to take this trend. So since the market was flipping bearish on Monday, what do we look for? We are looking for a 0-day cross in the direction of the trend, and then you guys know when we have trend in the market, you're only focusing on that side of the trend. Like 90% of the time, you're only going to be taking trades in the direction of the trend. There are certain circumstances where you might take a cross that's in the opposite direction of the trend, but to keep it simple, you always want to be trading in the direction of the 30-minute trend. So since the puts are crossed, since the puts are crossed on the 30-minute time frame, that means the market's bearish. We're only focused on the short side. So from there, we're just looking for a 0-day cross on puts and then a 50 dip on puts. So when we go to the 0-day chart, this is what we looked like on Monday. There really wasn't any entry you could have taken here. Yes, it looks like you could have taken this right off open, but it's hard to see how there was a big gap down in here just because of how big the candles got. But there was a pretty decent gap on the 0-day chart right here where the price was versus where the SMAs were, just because the SMAs were pretty far away from where price was, so there really wasn't a good entry to take on that, even though it did work out. Your trade from here would be a dip to the 50, or we come close enough to the 50 where it bounces and then we get back above the 10 SMA, and then from there you could go short. So this is what happened on Monday. You can see we didn't really get that close to the 50, but this was a trade that I did take. I went short at 12.55, so that was on one of these candle closures right here. Once we got back above the 10, this was a picture perfect entry. I mean, it was really low risk because you can see how much we closed above the 10. It really wasn't that much. It wasn't like we got a massive candle that closed above it and there's some sort of gap between price and the 10 SMA, but we closed above it. The 10 SMA is already pointed up or flat, slightly up. We went short right there on that candle close, and we went short, and look at the move we got. This was like a 70-point trade, and it was a really simple trade. We're just trading in the direction of the trend. Like I said, we're either looking for a dip to the 50, or if it comes down a little bit, trends down, and then it gets back above the 10, you'll go short there and then just ride the wave. So that's what we did on Monday. It was very simple. And then next up on, I think this was Tuesday, the following day, the bears ended up losing the trend. So right off open, we ended up getting this candle right here that closed below the 50, and at that point, there's still a chance that this does wick back above. It happens where we get an initial candle close above, and then the bears would slam it back down, but obviously that wasn't the case. And how you could kind of determine that is watching the 0DT chart. So I do remember this, that the calls were actually crossing like right off of open, so we ended up crossing on the 0-day chart on calls, and we're breaking below the 50. So in this scenario, you would just look for the calls to go negative, and if that chart did cross negative on the call side, then that would pretty much confirm that the bears are gonna probably get back above the 50 and get a really strong bounce off of that 50, which obviously that never happened because this chart ended up crossing negative and we got to push up higher. So how you would have played this was, if you look on the 0-day chart, I'm not sure if there was actually a direct entry on this. I'm trying to find the chart. Okay, so yeah, this is what the chart looked like on Tuesday. So you can see, like I said, right off of open, this was the open back in here. The calls were crossing, they were just crossing, and like I said, you just wait for this chart to go negative. If if the bears were going to hold a trend, this chart would go negative, and then you take your entry off that negative cross to go short. But that never happened, so pretty much it's just a waiting game at this point. And a trade I was looking for was a dip to this 50 SMA, and a lot of people get confused on this, but I know the market's neutral, but you could buy this 50 dip, because if you look here on the 30-minute chart, all right, so the bears are losing the trend and the 10's going below the 50. In that scenario, you could buy the 50 dip on the call side in this case, because this is the initial move from the negative cross. Since the bears are losing the trend, that you could buy the 50 SMA. Just think about it. It's just like a normal regular cross, like a positive cross, but in the scenario it's the opposite direction. And the reason you could do this is because since the bears are losing the trend, that we're most likely it's a higher probability that we're going to go higher, and in turn, that this 50 SMA is way more likely to hold versus just taking a 50 dip in a neutral market. So hopefully that makes sense. This is like a time where you could buy the 50 dip when we are neutral, and that does confuse some people because, oh, I thought we were neutral. You don't buy that 50 dip. Well, in certain cases, you could buy this 50 dip, and this is that one case where you could. So the chart's going negative. You could play this 50 dip. We never got it, but I did take a long position right in this area of this price action, just because when I looked at this 50 SMA, this thing is sloped up super hard, and with how we looked, it was pretty bullish because this chart was crossing negative still on the 30-minute, 10's going below the 50. I mean, I really didn't think we were gonna continue lower, so I did jump the gun on this and did grab some longs. Not my typical entry on this, but I did grab long, and we got a crazy move out of it. I mean, look at this move. There was a massive candle. I caught like 120, 125 points on this, which was a crazy move for, a neutral market. So I was up like 120, took my points, ended up going higher, but I mean, I really don't care at that point. But yeah, that was a super good trade, and one of the probably biggest trades I've ever had in a neutral market. But is what it is. It was a good trade, and then obviously we got the reclaim right there, where you could have taken a position, you could have went long right there, and that still gave you a ton of points. So if you didn't get the 50 dip, obviously we didn't get the 50 dip, but there was still an entry provided that was a good entry. So you would have been paid either way. That was just a trade that it's hard to judge that type of trade because I've been trading the system for so long, and when I see the 50 curl up like that, I know that the market's most likely going to go higher at that point. It's just kind of like an experience thing in my opinion, but it still could have went my against the way I was trading, but I did like how he looked, and I went with that. So that's how I ended up playing. What was that, Tuesday? And then this was Wednesday, I believe. Wednesday, actually, yeah, this is the Wednesday at the close. So we ended up getting a massive gap up on Wednesday. I'm pretty sure there was some news that came out about tariffs or something like that, and we ended up getting a big move overnight, and that ended up flipping the market bullish, but we didn't really get a continuation move from that 30-minute cross just because of how extended the chart was. We got this massive green candle. I mean, I'm not surprised that we got this pullback because we were pretty extended from where price was in the SMA, so this little pullback did make sense. And the trade that we took this day was a 50 dip on the call side. So yeah, this is what we looked like off of open, and this is something where you just do not take this trade. I don't care if it works out. It did work out, but it's right off of open, and you see the premium look like this. You could barely see the SMAs. The SMAs are so far away from price where they're just so tiny and just you can't even really see them. But someone in the Discord said, the calls are crossing. Do you just long, off of open when it looks like this? Like, no, definitely not, because the risk on this trade would be way too much. And you just don't chase a move like this. You got to be patient and just wait for the 50 SMA dip. In this case, since that 30-minute chart is going bullish, so you just wait for the dip to the 50 and you buy at the 50. And we ended up getting that, and we didn't. It was a losing trade, so we ended up breaking below the 50. I don't have the screenshot, I don't think, but I did go over it in a past video on Wednesday. But we came down in the 50. We got a little wick off of it. It was really funky because I think some news came out at the time we were getting near the 50, and the news dropped us to the 50, and it was just very funky. So, you could have caught some points initially, but it wasn't anything crazy, maybe like 40, 50 points, depending on your fill. Like I said, it was a funky news candle that came out, so maybe you caught some points, maybe you didn't, but in the end, we didn't end up holding the 50, so you would have been stopped out if you continued to hold it, and that would have been a small loss. So on Wednesday, that was the only trade we took. It was very simple. I mean, market's bullish. We're just looking for a 50 dip. We got the 50 dip, and it didn't end up working out. So actually, I think I do have the screenshot. I think Colton posted it in the Discord when it did happen. So yeah, this is what it looked like. I'm gonna pull it up right now. So this is what it looked like. You can see the whole time we were just trending up. You're just waiting for the 50 SMA dip, and you would have taken this 10 SMA reclaim in this area because we didn't really come close at all to the 50. To play these 10 reclaims, you want to see some downward trend, and then we reclaim the 50 or reclaim the 10 SMA. I mean, so if we came down like this right here, this wick on this candle, if we did bounce from here, close above the 10, yes, okay, I would take that reclaim because it was a lot closer to the 50 versus back in here. So you came down to the 50, you would have shorted right here. We got a little bit of a wick off of the 50, and then we closed below right there. So really, you wouldn't have lost that much, because you could see from where you entered versus where this candle closed, you're not really losing that many points. So once we closed below, you'd be out of that, and you'd have taken your loss. That was the only trade that was provided that day, and it would have been a losing day, is what it is. Not gonna win every single trade the market gives, but yeah. So you could see when we closed on Wednesday, though, this was the close, and this chart right here, man, is super bullish. If you look, I mean, 10's above the 50. The 10 SMA is down quite a bit, but this 50 is trading up nicely. Even though the market did pull back, I'm still like super bullish going into the next day and going into Thursday. If you even looked at the higher time frames, they looked really good. I'm pretty sure the 1 hour was crossing. 2 hour looked really good. So, bullish going into the next day. Why? Because the 10's still above the 50. 50's trending up nicely. There's no reason to be bearish. I mean, there's pullbacks in trend. That's what happens, and that's a good thing with the system. We know, okay, this thing isn't probably going to reverse just because we got this initial cross. Price is just resetting because there was a big gap between price and the SMA. So it's the same game plan going into the next day. We're looking for a 0-day cross on calls, 50 dip on calls. That's what we're looking for. So going into the next day, you could see the result. It played out perfectly. We ended up getting a nice move higher. You could see the 50's up. There was no reason to be bearish. We continued on with the bullish trend, and this is the trade you would have taken. Again, what I just say, what are we looking for? We're looking for a 0DT cross on the call side, because that 30-minute chart is trending bullish. So we got the cross right here. You would have entered on one of these two candles right here. We call this out in Discord, and we caught a very nice move out of it. This trade went over 100 points on NQ. Doesn't really get easier than that. And on a day like Thursday, there is no reason to be shorting, because when you look at the higher time frames, there was literally nothing telling you that we're going to reverse. So what I mean by that, 30-minute chart, super bullish, 10's above the 50, and we're just trending higher. We go to the 1 hour. 1 hour is just crossing. The 1 hour 50 is just turning, and we got back above the 10. Same thing with the 2 hour. The 2 hour is just crossing, and the 50s turned up super hard, and there was no overhead resistance to where I would think we're going to reject and pull back. So that's why we ended up just trending the entire day on Thursday. You can see the 0-day chart. We got the cross, and we just trended up the entire day. That's something with the system where the 50 usually holds when we trend super hard. So any dip to the 50, you'd be buying, and we didn't really get any dips until later on in the day, which honestly I would have stayed away from. But we did get this dip here. It did close below the 50, but see, this is one of those scenarios where it's kind of like situational, where that next candle ended up opening above that 50 SMA, where you could have continued to hold and wait for one more candle closure to see if we could hold the 50, and then if it closed below it again, then you'd be out, but ended up holding, and we got that wick up to the 10 SMA, where that's your first take profit, take a trim, move stops to even, and then you probably would have stopped at even on that next dip down in there. But yeah, I mean, that's how you would play Thursday. That's why I love the system, man. It tells you when you could expect just a very hard trend, and you could expect a very hard trend when the higher time frames look like this. I mean, why would I be bearish when the 1 hour and the 2 hour are just crossing and the 50s are curling up? There is literally zero reason to be shorting on a day like Thursday. And if anyone had you shorting or telling you to short, they most likely don't know exactly what they're doing entirely. And that's why I like the system, man. It's very simple. We're just playing SMA crosses. We're not charting. We're not doing anything like that. We're just watching two SMAs on different time frames. 30-minute chart tells you the trend. 0-day chart gives you the entries. That's another thing. 90% of the time, I'm taking trades from the 5-minute time frame on the 0-day chart. I'm usually never just taking trades based on a 30-minute chart. Sometimes, yes, if we come down to the 50, that will be a trade that I would take from the 30-minute chart. Same thing with a reject. I forgot to go over it in here, but there was a time we did reject this 30-minute 50. When we initially crossed negative, we ended up pumping all the way up to this 50 SMA on the call side. And if you guys know anything about the system, man, the 50 SMA, it's a major pivot in the market, and it's a strong area of resistance on the call side in this case, since it's sloped down super hard. And this is where you could take a stab at it short if you wanted. On these trades for my stop loss, I just go in terms of points. So I'd have a hard stop at probably 40 points on NQ, and if it hits my stop, it hits my stop. Sometimes it'll hit your stop and then reverse and go in your favor. But for these types of trades, I just have a hard stop because the 30-minute time frame is too large of a time frame to have, you know, that stop of a candle closure above. So I usually just go in terms of points, and you can see what happened. We ended up rejecting this 50 SMA perfectly, and we dumped like 200 points on NQ. So, you know, these are the only times where I'm not taking an entry off of the 0-day chart, and I'll just buy at this 50 SMA right here if I'm playing a reject, or if, like I said, on the 30-minute chart, we come down in the 50 SMA and we buy a 50 bounce. And there's certain scenarios where I won't just buy the 30-minute 50, like this one back in here where we closed below the 50, and in this case that the calls were crossed. So like I wouldn't be just buying that 50 dip when I see the 0-day chart on calls are crossed. So, you know, there's certain scenarios where you do one thing versus the other, and this is one of them where I'd wait for this chart to go negative before I take any, you know, longs in this case. I wouldn't just slap this, you know, 50 dip buy. Even though we did open below it, you know, wouldn't be buying that. I'd wait for this chart to go negative, and we never got that. So yeah, I mean, that's pretty much every trade that we took throughout the week. I think there was like one loser with the 50 dip, and you know, it's completely fine. You're not going to win every single trade. If you just stick with the rules of the system and you trade the system how it's supposed to be traded, you'll do well. That's something a lot of people, I feel like, have a hard time to do. A lot of people love to add things to it, be like, oh, I'm just going to add another confluence to it. I'm just going to add the MACD. I'm going to add the VWAP on my chart. I'm going to add the 200 SMA. I'm going to add this. I'm going to add that. Like, I don't know what we're doing, but just don't do that. Like, the system works exactly how it is. Why change? Why add more confusion to it when you know that whatever, like how it's designed right now works already? So, you know, I see so many people that try and change it or try to add things to it. It just doesn't make sense to me, because it's like, you know, it works. You see how we use it, and you know it works. Like, why are we adding things to it just to add more confusion or uncertainty to like a trade? Or not uncertainty, but just like add more confluence, people like to say. But I mean, like, why are we doing that when this already works how it is? Like, why you're just asking to like add confusion to your trade, because you'll be like, okay, this chart's crossing, but my other thing that I add to it is kind of saying this, so I might just sit out of this, and then, you know, you miss out on the trade. So yeah, that's pretty much all I got. I'll go over the game plan for the week tomorrow in the recap from Friday, because man, Friday was another good day. It was another good day like Thursday and Friday. It was so easy to read, and that's why I love the system, because we know when to have our foot on the gas. And like this trade right here, super high confidence. Like, this is a full port type of play. Friday was another full port type of play. So you know, it was very good week for trading the system. And yeah, if you guys want to learn, join our Discord down below. That's where all the trades are shared. All the knowledge on how to trade the system is in there as well. We got plenty of examples, plenty of streams, tons of hours of streams that Colton's done. So ton of value in there if you want to learn. But yeah, that's all I got. Drop a like, drop a sub. I'm out. Peace.